Next, Sykes Accounting and Consulting.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Hello, everyone. You're on the Rant Radio Network. I'm Anthony Sykes, and I hope you have questions today. Give us a call at 855-969-7268. Or if you have a question you'd like me to answer on next show, send it to my email, asykes@sykesaccounting.com. Visit our website. You can see replays of today's episode and other episodes by going there. Now, to my left is Mr. Kevin Markle from Aflac. And what we're going to talk about today is something very important to anyone who has employees. So obviously you need to have a business, or if you're thinking about going into business and you're going to have employees, Obamacare is kicking in, and in the next 30 days we start to have some actionable things that have to be done, or there could be some penalties. So welcome, Kevin.
Thank you very much.
Tell us a little bit about how you got started.
Well, I started back in 2007. I was in a career with a home improvement warehouse. There's a few big ones out there. I was with one of them. And I was in that career, and I had opportunities to move forward, and I decided that I didn't want to be locked into that type of industry, because when you're in that industry, if you want to move up, you have to physically move. So I decided that I wanted to find something else. And my father being in sales for 40 plus years, I decided maybe this would be a good career move for me. And when I did that, I looked into a company that had great ethics and a great financial stability that was going to be around for a long time. And with that, I found Aflac, and that's where I started.
Okay, all right. That's a good segue. Tell us about Aflac. What is it? What do you do?
Well, pretty much Aflac is, as healthcare costs continue to rise, Aflac and supplemental benefits in whole help provide a financial safety net for employees because there's more and more cost put onto them with health insurance. Health insurance, HMOs used to be minimal cost, just a copay and you go in and you get out. Now there's more and more cost put onto employees, so our plans pay cash directly back to the employees, so they can continue to pay their mortgage, pay their car payments, and give them that financial protection.
Okay, all right. Well, let's kind of get into the meat of it. Before we do that, let's tell people how they can reach you.
You could reach me. My direct line is 714-768-4202, or you could reach me by email at Kevin_Markel, Markel, at us.aflac.com.
Okay, thank you. Now, the major reason why you're here, we got a lot to put together in a small period of time, but let's talk about that Health Care Act. Let's
yeah,
get out there.
It was two parts. It was the 50 full-time equivalent employees. There was a mandate to cover any company that had over 50 had to put health care in force to cover them, which now got pushed off to 2015. But the second part of that was there's October 1st deadline to notify all employees. If you have any employees at all, it's every company had to notify them of the health exchange that's out there. Every state has one. California has coveredca.com is the website. And every employee had to give them the proper information about what was out there. And that's mandated if you have health insurance or not. So just because you offer a plan that's deemed affordable and you have good coverage, you still have to notify them that there is an option out there.
Okay, what do you mean by notify them? Is there a form they need to sign or something?
The Department of Labor has a form. It's approved by them. And then you're going to have to give that to them. Either email it, payroll stuffer, or with a service that I do, I actually educate all the employees. Because a lot of the times, especially if you offer health insurance, there's going to be questions if this is going to be better or worse than what I currently have. And sometimes that's a drag on a HR department to try to explain to every employee what's better or what's not. So that's part of my service is I go out and explain the differences. There's tax credits that go along with the exchange, depending on your income, the federal poverty level. Based off, it's 100 to 400%. Then you'll qualify for a subsidy of some sort. So there's a calculator online on coveredca.com. You could also look that up too to see where you qualify.
Okay. Before we do a little bit more, let's sort of deviate a little bit, and
Okay.
let's talk about how AFLAC, and this is your commercial here, can help these small employers. Now, I know it's 50 and above, but I'm talking about the guy with 1 to 25, 1 to 30, something like that.
Aflac, we do as little as 3 employees offer our benefits. Now, if someone were to need help getting the exchange notification put into place before the deadline of October 1st, I could do that. What I would do is I have letters that I could populate all your employees' information into, share that with them, go through question and answers, and then by doing that, if you allow me to do that, I would offer one of my products, at least one of my products, to your employees. And I could do that. It's at no cost to the company, which is really great. Giving them the notification, and Aflac products are no cost to the company too. So that's pretty much what I'll do.
Okay. So by no cost to the company, basically you set up sort of a cafeteria-like plan.
Yes.
And the employee is putting in their money before tax.
Mm-hmm.
So it actually will reduce their taxable income.
FICA.
And that's okay.
Yeah, it's going to save employees tax dollars and also employers. So there's a tax savings there too with FICA, workers' comp, all the stuff that's off your gross payroll. So.
Okay. All right. I just wanted to kind of put that out there for different employers as to how, because when I see a client, they're looking at, okay, here's another cost, and it actually is not a cost. They're not really putting anything in.
Yeah.
It's the employee that's going to be paying in, depending upon what's available out there. And with the health care, it's possible that they could fund part of their health care or all of their health care in combination if the employer wanted to pay some. So there's all kinds of possibilities of tax credits now. If the employer is paying at least 50%, then they can get a credit on health care.
Yes.
The employees have, if that were in a kind of cafeteria plan, they're getting it before taxes, so everybody could kind of have a win-win situation. It just looks or takes some planning there. So I just wanted to kind of toss that out so that our listeners, because this is a fairly complicated topic that has now, it's on a clock and the timelines are coming up. Some certain things need to be done. IRS has hired people to do the audit because it is their responsibility to do this. And you had talked about Department of Labor has also hired people because they're going to be checking to make sure, I guess, these forms are filed and everything else. Let's talk about that while I got into the subject.
Pretty much the IRS is going to go after individuals if you don't get health insurance by the deadline of the first of the year, and Department of Labor is probably going to be doing the audits on companies. Now, if they were to do an audit on you, you have to show proof that you did this with various other things, and I'm just trying to make that as easy as possible by taking some of the workload off of you, taking some of the risk. If you have a third party do it, at least you know the responsibilities on someone else to make sure it's done right. And by doing this, I've done this quite a few times over the last month or so, because this has been out for a while now, and it's actually quite easy for me to do it. The more you do it, the easier it gets. So, of course, a little practice makes perfect. So.
Okay. All right. Well, yeah, I found practice does make perfect, but you got to practice more and more anyway.
Exactly.
Let's talk about what do employers need to know, and we'll get kind of started, and this is a sort of two-part question, but what does every employer you run across, what do they know or what don't they know that they should know?
A lot of them think that they are not part of this exchange notification because a lot of the news early on was about the 50 plus equivalent employees. So that was the big news, that was a big push, and then they got pushed off, and that's all everyone heard. And a lot of people don't know that it's every company that has to do this. That's the biggest thing. And people are starting to get notification now that they have to do it, and they're like, hey, what is this? Do I have to do this? I'm getting that question all the time. Or I'll just wait and see what's going to happen. Well, I'd rather be proactive on business side and make sure it's done properly ahead of time. And if it changes, it changes. Mm-hmm. We don't want to wait until the last second. And then if you wait till the last second and try to do it and you don't do it correct, then there's no time to correct it. Okay. So they just have to be prepared for the upcoming changes. And working with me, I work with a lot of different companies, and you go into the HR department, and they're trying to stay up to date with all of this, and it changes all the time. They have an inch-thick folder of everything. They print out every time it changes. They print something new out and keep adding to it. Well, when you work with me, I'll make sure you're up to date with all the changes, so you don't have to spend all that time doing that, because that costs a business money too when you're constantly researching something that keeps changing.
Okay.
So I try to keep everyone up to date and any changes that will be coming forward.
Okay. We're getting ready to go into a break. Let's tell people how they can reach you again.
My direct line is 714-768-4202. And my email address is kevin_markel@us.aflac.com.
Okay. All right. We've got about 20 seconds here before we do the break. I was expecting you to bring the duck in here, you know. I wanted to have an Aflac on me here. But anyway, I had one and the battery went out, so I don't know how to replace those batteries. Yeah. But yeah, we're here with Kevin Markel. We're talking about insurance. Give us a call on Rant Radio Network, 855-969-7268. We'll be right back after the break. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.
The experts know that for pastry, Baker's Bodega has it all. Exclusive brands like Westco Bank Mart, Satin Ice, and Pastry Pride. One-on-one day seminars for cake decorating and gelatin art. So for our service, wide range of ingredients and supplies, and for the low prices, Baker's Bodega has it all. But you don't need to be an expert. Baker's Bodega, 7869 Paramount Boulevard in Pico Rivera. Come, we're waiting for you.
Do we have your attention? When it comes to tequila, two things matter: heart and passion. Never compromising integrity for mass production. Number one tequila delivers the goods. Taste the heart and passion of Mexico in every bottle. We make it right. We make it fun. Superior tequila. There's only number one. There's only number one. There's only number one.
A home is the biggest investment in most people's lives. Buying or selling should be a positive experience.
Whether you want to be a wealthy real estate investor or just trying to find a place to call home. At AJR & Associates, we focus on the client's needs.
We understand the market better than most. Let us bring the value to you and make the right choice.
AJR & Associates, making your dream house a reality. Call us today for a free consultation at 562-882-1976. Or you can log on to www.agrrealtors.com.
With a track record of great results, bringing knowledge, wisdom, and expertise to you. Hablamos Español.
Building a custom home or business is a huge deal. For some, it's the largest project they'll take on in a lifetime. Choosing your team may be the most important part of ensuring a successful building project. Starting a project by working closely with Core Design will create what's just right for your lifestyle and your property. But selecting the right builder is perhaps the most important part of creating the team. At Core Design's, customer service, quality craftsmanship, and integrity are the keys to our company philosophy. Your custom construction dreams are just a phone call away. Design at 213-453-1609. Once again, that number is 213-453-1609.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back, everyone. This is Anthony Sykes. You're on the rantradionetwork.com. Give us a call, 855-969-7268. Today's topic is something that will affect everyone, whether you have a company or work for a company. It's the healthcare and what's happening. And the person to my left here, Kevin Markle from AFLAC, is explaining what is coming up very quickly. Now, Kevin, we were talking about what employers need to know and what they don't know, and let's go on with that a little bit more.
Okay, so I think more than the employers need to know, I think the employees need to understand what they're going to be getting into. If the company does not offer health insurance, there's a mandate that everyone in America has health insurance, unless you're exempt. There's a few exemptions, but understanding what your costs are associated with that is very important. If you fall within 100 to 400% of the federal poverty level, there's going to be tax credits available to you, so you could subsidize your health insurance. Unlike traditional plans that we see, they're going to be graded on a metal tier: bronze, silver, gold, and platinum. Now, with that, they think silver is going to be the benchmark. Now, unlike if you have health insurance, the traditional plans with a still minimal out-of-pocket cost, the silver plan, if you're a family, the out-of-pocket max a year is going to be $12,700. Now, someone making $10-12 an hour, that's going to be half their income for the year if they use up all their out-of-pocket max. So that's very important to understand your risk.
So how do you come up with that out-of-pocket?
That's the biggest thing. Now, one way to help supplement and come up with some out-of-pocket is to get additional coverage. Gap insurance, AFLAC is a great way to do that. So you can help cover yourself, because the out-of-pocket cost could be financially draining. A lot of times people cannot pay that, and you end up paying $25 a month towards your medical bill for 20 years. You never get it off of you. I know my father's going through a similar thing right now where he's paying $25, $50 on a bill because he just doesn't have the money. When you're on a fixed income, and most Americans live paycheck to paycheck. You don't have expendable income to pay those kind of bills. Even if you were choose the platinum plan, which is the best plan they have on the exchange, the out-of-pocket cost is still really high. The deductible on that one is the out-of-pocket max on that one is $8,000 a year for a family, which is still extremely high. And if you're an individual, it's $4,000. So there's a lot of cost that's going to be put on to individuals to help keep the cost down overall for medical, to make it affordable.
Wow. Mm-hmm. And I apologize to our audience out there. We are looking at this this sort of spreadsheet that has the different plans, and we didn't get it in time enough in order to get it as the projected on the screen. It wouldn't have come out right. So you just sort of have to take our word for it. But kind of go through. We have actually 4 plans here: the bronze, the silver, the gold, and the platinum. And let's kind of get an overview of what each one will do and why it's individuals are going to need to understand this.
The bronze is pretty much the essential plan, just enough coverage to get you in compliance. It's very limited. It has you get 3 primary care visits per year. Has a $300 emergency room copay, which is, if anyone has health insurance, it averages about $100 right now, so it's 3 times as high. But that gets you in compliance with the national mandate. Then as you move up, the copays go down quite a bit. On the platinum side, it's still $150 just to go to the ER, which is still higher than most health plans right now. So pretty much you're going to pick and choose what's affordable to you. Now, depending on your tax credit that you get through the federal government, you're going to be able to afford or not afford certain plans. The benchmark is really going to be the silver plan, but even with the silver plan, there's going to be high out-of-pocket cost on everyone. And they say pretty much the state average for the silver plan On the lowest state average plan, it's silver. It's going to be $304. Now, most likely, if you qualify for a rebate, you're not going to pay $304 a month, but it will be substantial.
Wow. Well, okay. Let's do a little commercial here for you.
Okay.
How would Aflac work with the silver, which we think may be the benchmark plan? How would that work for that family or an individual?
So with our plans are going to pay cash directly to you. There's no coordination of benefits. So the better the plan you have, this is cash benefits to you. So if you were to go to the ER, if you have just a basic accident plan, it's going to pay X amount of dollars for going to see the doctor. We have a hospital plan that pays X amount of dollars per day for being in the hospital. Now with the silver plan, you have a 20% negotiated rate, so you're paying 20% of the bill up until your max. So there's a high cost on that. And I believe the average hospital stay is about $10,000 a day, correct?
That's
somewhere
correct,
about there. Yeah. So that's pretty much $2,000 on your 20%. So easy bill, right?
So Aflac pays that $2,000, right?
No, it's not going to be the whole $2,000, but we have a set fee that we pay. Now, of course, the better plan you pay, the better our plans work. The less out of pocket you have, that's more cash benefit to your household. Now, if you have less out of pocket, so you get the same amount regardless if you're out of pocket. So that's the benefit of Aflac.
Okay, all right. So I guess needless to say, your phone should be ringing off the hook here. So let's give them that number again here.
It's direct line is 714-768-4202.
Okay. Now, how can an employer? I am an employer, employee, and an independent contractor, and I have a lot of things going on. One, just trying to stay in business. Two, trying to be different from the competition, and three, obviously trying to get new business and keep the business that I currently have. So, what can I do? What do I need to know, or how can I keep up on this?
Well, if you want to keep up on it, always you have the opportunity to reach out to me and make sure you're in compliance and that everything's taken care of properly. Because with running a business, you want to focus on building your business, or at least maintaining it at the minimum. Because sometimes times are really tough. People are just trying to stay open a lot of the times.
Right.
So you don't want to spend extra time, administrative cost, trying to figure out all this on your own. So having a consultant to help you is always a great thing. Just
Okay.
like you consult people on taxes and various other things.
Right.
I do the same with this.
Okay. All right. So for that small employer out there, I guess the first step, and obviously the second step is to call you, but that first step is some type of awareness. Where do they need to look? Where do they need to go just to get an idea about this? I know in my business, my clients are calling me, and they're asking me, which is why I called you.
Yes.
And I'm assuming that if you have a small business and your tax person, your accountant, we have to know a lot about a lot of things, and sometimes this is one of those where a little bit of knowledge doesn't do you much good. You need to have a lot more, and so where can you
To find a lot of the information that we're talking about today, if you go on the state's website, coveredca.com, it outlines a lot of the stuff we're talking about, so you can get most of the information yourself.
Okay.
It breaks down the different levels of plans. There's a calculator that tells you how much your tax credit would be as an individual, so you're not guessing on this. You don't want to wait till December 30th and try to figure out, I got to get it by the 1st, and then you're kind of out of luck. Try to get it done in time. So
Well, no, there's a lot of people out there like that. So.
we'll do it. Yeah, there will be, but I'm trying to educate people as much as possible, make sure they have all the knowledge and are available to the tools out there.
Okay, all right. So with that, what's I guess what's a good way to put together a plan? I don't want to put you on the spot and say what could an average, plan cost for someone, because it depends on what they choose and how much they want. But typically, what would a plan do? Someone comes into AFLAC and they pick a typical plan. How much of that can be paid to them, for them, or so on? I mean, you see the commercials I do, and I just kind of
And typically the main plans that we have, they run anywhere from $2 to $14 a week, depending on what type of plan you get. And most of them are pre-tax.
Okay.
Depending on what you get, there is a disability plan that we do have, which is after tax, because you don't want to be taxed when you use it.
Okay.
It's a great way to supplement state disability, which pays 55% or less of your income. A lot of times 55% doesn't cover 100% of the bills, so there's a great option for people that are concerned with that.
Okay.
So it just varies on the plan you want, but they're affordable. When you look at other things out there, a cup of coffee, $6 now, so they're still affordable.
Yeah.
And they're pre-taxed also, which is great.
Okay. All right. So that works. So that gives me an idea. So, do you put on any seminars or anything, or you just someone calls, you come in, you
Someone
talk to
calls or I call people. We set up a meeting and I go through relevant topics that might concern the business, and then we see if there's a way we can work together.
Okay. All right. I appreciate that. We're going to be doing some things. I know that we have some seminars coming up in the near future. Actually, I'm planning some things for small businesses in October and November, and I hope to have you as part of one of those. But before we hit the break here, go ahead and give us your information again.
My information, it's Kevin Markell. My direct line is 714-768-4202. And my email is kevin_markell@us.aflac.com.
All right. And hopefully you give Kevin a call, and we'll be seeing you right after the break. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.
3 balls, 2 strikes, the pitch. Swing it.
Make your team look like pros with custom lineup cards. Whether you're a travel team, rec team, all-star team, or just some old guys playing slow pitch, we can make your team look a little better with some custom lineup cards. For the umpire, for the opponent, for the scorekeeper, for the dugout, no matter where your lineup card goes, you will look like a big league team with your team logo and name on top of your personalized lineup card. Just visit CustomLineupCards.com. With the best prices in town, you are sure to hit a home run with us. Visit CustomLineupCards.com and go pro.
Are you watching the game at home? Why? Come watch it at Mambo Grill, the hottest spot in Downey. You'll have good food, drinks, and a great time at a low price. We have the coldest beer in our sports bar, where you can enjoy the game on any of our huge flat screen TVs. And when your home team wins, you get 25% off anything in Mambo Grill. We're on Downey Avenue, 1 block north of Firestone, or visit us on the web. Mambo Grill, love at first bite.
Hey, bro, this is a good game. You know what would make it better?
What, bro?
A michelada.
A michelada? What's a michelada?
A michelada is somewhere in the middle of a Mexican Bloody Mary and a Mexican margarita.
Oh, I got you covered, bro.
You got a cup in your pocket?
No, sir. I got my pocket-sized michelada. Mucho macho michelada.
Pocket size?
Pocket size, so you can take it with you anywhere you go.
Where'd you get that at?
At the nearest convenience store, and you can also buy it at muchomachomichelada.com.
You know what will make it better? After we get drunk, if they had a line we could call.
We can call their drunk line. You can leave a message and then log on to the site and listen to your stupidity afterwards.
What's that number?
It's 855-MICHE-69.
What's that number again?
855-MICHE-69.
Awesome. Mucho Macho Michelada.
Nurses Life Express provides unique apparel for all the hardworking nurses that wear many hats. It is apparel that expresses nurses' amazing, humorous, and caring personalities. After all, nurses are as influential as their united goal to help others. Nursing's not easy, but somebody's got to do it. For more information, please call 562-270-4312 or visit their website at www.nurselife.com. www.nurselyfe.com. Nurseslife.com, where nurses' lives are expressed.
We are the Three Guys Rant, coming to you live every Thursday from 5 to 6.
You can call us at 855-69-THE-3-GUYS.
It's not the Three Guys. This is why you should turn in, because one has Tourette's, the other one's illiterate.
You really should listen in. You never know what's going to happen.
855-69-3-GUYS, G-U-Y-S, and the number 3, not the.
Faces for radio, voices for the deaf.
Look forward to talking to you.
Hey, I'm audio candy. I don't know about you guys.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back, everyone. You're on the RantRadioNetwork.com. Give us a call, 855-969-7268. And to my left here is my co-host, Ms. Trissa Hugues.
Hello, everyone.
We have some things coming up in the near future on the website. You want to talk about that? The seminar with
Teleco.
All right.
Yes, I'm not sure of the date.
It is September 26th, I believe. And
yes, well, that's a Thursday, right?
That's a Thursday.
Yeah, September 26th on a
So
Thursday.
we won't be doing the show that day, but we hope that to see you at the seminar. It's going to cover, it's for small businesses. It's going to talk about, our topic is going to be on one, business plans and how they help you to acquire, or how they can help you to get capital, funding, line of credit, something like that.
For those of you that missed last week's seminar, it was great. It was very informative. We had EDD, SBA, Anthony Sykes and Company, IRS, which was Anthony Sykes and Company.
Well, we spoke for them.
We spoke for them.
We were not IRS here, but we spoke for them.
It was just, they had a great turnout, and we met the commissioner of the Board of Equalization. Very funny gentleman. Made us laugh throughout the whole thing, and great guy.
Okay. Well, speaking of the commissioner, he put out a newsletter, and let's kind of talk about that. The California leadership focuses on jobs in the state economy. Every night we do sometimes get upset. I do, with California, because they seem to be going the opposite way when it comes to attracting business. And I like the state. I like this city. And I think that California could be the best state in the union if it did some things differently. Now, that's just this person's opinion. And, of course, it's only one of, I believe, some 37 million. So that's how big my opinion is. But what they have is AB 93 and SB 90. They repealed tax incentives to create new tax credits. So we can talk about that.
Well, new tax credits. Is this going to be ushering in for all the tax credits that are going to be expiring?
Well, that are on expiring. This was done July 13th of this, July 11th of this year. And there were two bills that brought in more business favorable climate to stimulate manufacturing. Manufacturing in any state, I mean, is kind of a backbone, because you need a lot of people sometimes to do it. Service industries, yes. Distribution, yes. But manufacturing is kind of the blue collar staple, because you have a certain income range that you have to pay people when you get into manufacturing as well as research and development. So I believe it was going to give a sales and use tax exemption for those who purchased property, and 50% of that property was going to be used for manufacturing and R&D, or research and development.
And another one is the hiring tax credit as well. Now, isn't that a federal? That's not only state though. That's also a federal
Yes,
credit as well.
there's a federal credit, and the reasoning behind it is to reduce unemployment, and therefore dollars sort of multiply. If you hire someone who is unemployed, they then become productive. The income they earn, they go out and buy something. That income, what they bought, is earned and paid to others, and so on and so on. So
flowing.
basically, $1 could multiply into 10. If you take it another way, and that is you hire someone who has been in the criminal justice system, you then do the same thing plus have an effect of reducing potential crime. So you get
I was gonna say
two wins or 3 wins for the price of one. So it's all kinds of things.
Well, I wasn't sure if it was the person that was in the system themselves or the person.
Yeah.
Well, they get credits. So they get credits for being in school.
Yes, they do. I mean, there's a school tax credit. There is a credit for hiring inmate workers, or people who got out of prison, to give them a job, basically to give them a new start.
I believe you have to be a felon, though. I don't think it was a mystery. I think it's just felony.
Well, yeah, misdemeanors don't seem to hold you back as much as in getting a job.
Right.
A misdemeanor is something possibly a traffic violation. You went to court, you lost, you had unpaid traffic tickets and so on. Now you get other misdemeanors, but a felony, just by the name, implies, or a potential employer sees it and says, "Oh no, I don't know if I want to touch this guy."
It's a red flag, yeah.
And they're trying to. Everyone makes mistakes. Everyone's entitled to a second chance. So if this person wants to turn their life around, this is an opportunity, but they have to find someone to give them that opportunity. So employers are given a credit to give that person an opportunity.
A lot of the bigger corporations do that, like Home Depot, Lowe's, just big McDonald's. A lot of them offer that. And there's like a list of so many.
Yeah, there are, and it works. Obviously, sometimes it doesn't work as well as as they would like, but it does work. So California is taking that step in the right direction to try to help businesses grow, and I applaud that.
I have a question.
Go ahead.
Now, if I'm a sole proprietor and I incorporate, but I've already been in business, but I incorporate and I put myself on payroll, will I get that credit? Even though you've been in business?
No, it's not for the officers. It's not. You were not unemployed.
But there's also a hiring tax. I mean, you're not unemployed, but it's you're hiring.
I know.
You're going in. Okay.
You're
I don't know.
always-
There's all these different regulations.
It's also the flip side is fairly hard for you as an owner to lay yourself off, because if you lay yourself off, then technically there's no one running the company, and therefore you need to shut it down, and you may or may not be entitled to unemployment, which is kind of tough. You work every day just like everyone else, but those are some of the breaks for being the owner. But no, if you whether you have created from a DBA, a corporation, No, you can't get a credit for hiring yourself. Now, you could possibly get a credit for hiring a relative if they had not worked and met the other criteria. So, it's a little bit different there. Now, I guess some of the other things that have been happening throughout the IRS world, I wanted to talk a little bit more about insurance. I guess you possibly could get up to $2,700 in tax credits for offering insurance, or if the family had insurance. That's something that you need to talk to someone a little more specific about, or a little more in detail. I use for my consultant on health things, health insurance issues, is Aflac. But
now, is this credit, Anthony? I'm sorry. Only for people that have insurance that's outside of their business, like they get it at home on their own, just not through their company. Is it, or is it? Because I read that there was a credit that you can get if you pay for your insurance yourself, and it's not through your job. It's not.
That is correct.
Yeah.
That's the incentive, because everyone will have to have insurance, and actually coming up in about 30 days, the first phase or a phase of it, where you sign off and either look at the state's insurance plan or another, you do or you can receive a credit for buying it. And then it's the out-of-pocket expense that's high. So you look at what's called gap insurance, and in Medicare, that's been around for a while, what they call Medigap, and that is the difference between what's paid and what's owed, and what's owed would still be what you, the individual, would still have to pay. So there is a type of insurance that actually will pay that difference, or the majority of that difference. And that's something we'll be talking more about as we get closer into the end of the year, because this is something that's more and more important to not only businesses, but to individuals who work for those businesses or do not work for, because the mandate is that everyone, with some exceptions, is to have insurance. Well, before we hit the end here, do you have anything else you'd like to say?
I have a lot of things I'd like to say.
Let's say them. Let's say them. Let's say them. Come on. Time is running out here. Well, we thank you, and we'll see you on the next show. This is Rant Radio Network. I'm Anthony Sykes and Tricia Huggins. See you next time. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.
Looking for a delicious, fresh family meal that's ready when you are and easy on your budget? Welcome to Piara Pizza. We make our pizzas with handmade dough, 100% real cheese, and tomato sauce blended with our own spices. Nothing is ever frozen. We always have large pepperoni and cheese pizzas fresh and waiting for you for only $5. Or choose one of our specialty pizzas. We have veggie, meat lovers, supreme, and Hawaiian. Add an order of our amazing hot wings, cheesy bread, or breadsticks. Our locations are ultra-modern, ultra-clean, and open 7 days a week. Visit any one of our locations today, or check us out on the web at www.piarapizza.com. Piara Pizza. Fresh, hot, and ready for you when you come in. Stop in for your Piara Pizza today.
The Share Foundation is the health division of the Coy Chiropractic Institute, a 501c3 509A2 public nonprofit organization dedicated to the growth and development of the natural health care services, in particular through the chiropractic profession, offering health services at the Share clinics in the greater Los Angeles area. Your donations can help in expanding these facilities across the nation. research programs, and public education, thus offering a solution to the many of the health challenges we face. Your donations are tax deductible and can be sent through our website at www.sharefoundation.com. That's www.cherfoundation.com by clicking on the donation button. Thank you.
Number one. Number one.
Is that a stutter or as high as you can count?
I was ordering number one tequila.
Everybody's asking for number one.
Great, another fancy bottle.
These guys are true artists. Never compromise integrity. They make tequila
Come
the
on.
old-fashioned way. Never mass-produced.
So what are you saying?
I'm saying have the number one. Anything less is number two.
Number one.
Number one, tequila.
Oh, man! TheTicketSurgeon.com. Reach us at 855-WIN-4-199.
Did you get caught speeding, texting while driving, or doing anything else you weren't supposed to do?
Give us a call. Don't miss work. Don't lose out on the money. Don't get any more points. What about your insurance? Let us fight for you. TheTicketSurgeon.com at 855-WIN-4-199.
Hey people, are you ready?
Are you ready for some football?
No, it's called a triple threat.
Wait, a triple threat of what?
Entertainment, gossip, and pure fun.
It's Tinseltown Talkies, Thursdays at 6:30 p.m.
Only on www.rantradionetwork.com. Don't miss out if you want to be a part of all the action.
With Rasha and Pimo.
That's right. See you then.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back, everyone. You're on the Rant Radio Network. I'm Anthony Sykes. This is Tricia Hugues. Give us a call, 855-969-7268. We'd like to know what you'd like to, if you have a question.
I want to reiterate back to the tax credit that we were talking about regarding insurance. I wanted to know if that credit is going to affect our exemption. Is it going to affect the, right now, say you make so much money, $20,000, and you can only take so much. It's like a percentage when you're filing your taxes. You can write off so many things, but unless it passes the 7%, 6%, or whatever that you can write off, is that going to affect it?
Oh, okay. Are you talking about the standard deduction or the?
What did I say? Exemption?
Exemption.
Your deduction.
Yeah, standard
Sorry.
deduction that you would have either
Not
as
exemption, yeah.
a single person or filing a joint return. That should not affect it. Although it's interesting and a good question, because your health insurance premium normally is an itemized deduction. And this year, for the 2013 taxes, it's the amount, the hurdle that you need to overcome before it is deductible went from 7.5% to 10%. The way I understand this is you can receive a credit. So that credit is a dollar for dollar reduction of taxes, regardless of whether or not you can deduct that on your personal return. So let's say as a single individual who does not own a home or anything, or have any enough to qualify for an itemized deduction or itemized return, you still might be able to have a tax credit. If your insurance premium for the year, let's say it's $6,500, and the tax rate is, or the credit rate is, let's say 10%, $650 would be used to offset any taxes. I don't know if this is going to be a refundable tax or not. So if you owed no tax, then of course you would not receive an additional $650. Now, what we talked about a little earlier is that it's possible to have that in combination with a type of plan, a cafeteria plan or a supplemental plan, that premium be taken out above tax. So it reduces the taxable dollars. So instead of, again, taking that 20,000, you're looking at $6,500. So now it would be what was that, 13.5. That would be the take home. That would be the income you'd be taxed on. So not only would you get a bigger refund, you still, well, you would not qualify for the credit. Possibly you could, only because the way this is set up, it could still give you that 10% credit. I'm not sure. I haven't done that much research on it, but the fact that you could have it used with pre-tax dollars gives everyone the benefit of a larger refund, although it then would reduce other credits such as earned income credit and so on.
Right.
So there's a trade-off.
I believe that what I had read was it benefits a lot of lower income as well as, middle class people as well.
Yeah, it does. It does. There's a trade-off because the earned income credit is based upon the W-2 amount, and that's going to be reduced because if it's before tax, it's going to reduce that amount. However.
Oh. All right. Well, once we figure out or, get more information, we'll inform everyone else as well.
Yeah, that's true.
I mean, everything's coming out in little spurts here. More information today, some next week. All the good stuff is, tax season's 4 months away, 5 months away.
Yeah. Well, we have to get past two important hurdles. The first hurdle is
the extensions.
Well, no, on a more, I guess, national scale is the budget. If Congress passes the budget, then IRS can move forward. If it does not, IRS will have some other issues, and we may or may not see what the new tax changes or current tax changes for 2013 may or may not be. So it may be a repeat of this previous tax season in which the laws were not made final until January. And if all preparers know how bad that was. So I'm hoping that things move a little smoother. Then on top of that, yes, we do have the extensions for businesses coming up in about a week and a half.
Yeah.
And personal returns
October.
Coming up in about 6 weeks. And after that, it is time to look forward and concentrate on tax planning and on tax strategies.
Yes.
So everyone should be looking forward or looking at how can I reduce my taxes and what is going to affect them this year.
We also, for those of you that are interested, we have papers and we have information. If you have businesses and you want to know what you can write off, you want to know if you're interested, or just all these credits, and we have papers, and if you want to go on our website, we can send us an email or call us, and we'll work with you, and we'll send them out to you. And just if you're not sure, we have all that information for you. Speaking of IRS, a way for them to generate income is installment agreements. They are going to be raising the fee.
Okay.
What do you think?
Well, where's it going from, or where is it to, or you want me to comment on that? Huh?
All of the above.
All of the above. Well, the biggest fee, and this is one where people may not really know, is when you do an offer and compromise. I'm going to start at the biggest one first. An offer and compromise is when you owe a large amount of tax and you want the you want to offer a lesser amount than what's due. And if IRS accepts it, then you either pay it in one payment, or I think in a series of up to 4 payments. I'm not sure on that one. But there's a fee. Normally it's a $150 fee, but totally it could get as high as about $2,800 when it's all said and done, depending upon the amount that's owed. Now, if you have a installment agreement and that's for any amount that you're not going to do an offer and compromise on, so whether it's $500 or $5,000, you can ask the IRS to let you make payments. And that fee was $105, and I believe it's gone up. And where it's going up to, I think it went up about almost 50%. I'm looking here in the...
it went to $282, I believe.
Yeah.
To determine the full cost. Yeah.
Yeah. And what they're saying is that's their cost of operation. And
I think it's a cheaper fee if you do a debit, like a debit from your account. I believe it's half the price.
well, they're pushing to have everything done electronically.
Right.
And it's cheaper for them because then there's no one touching paper. And so they can have more personnel in the money making operations, such as collections and the assessing of tax.
Yeah, sounds like a lot of the, utility companies, they debit it from your account, and when you don't want it debited from your account anymore, they continue to debit it until you tell them.
Till you tell them several times.
You're like, I'm writing checks again. No more debits.
No, that's unfortunately a possibility. So that's a downside. How do you get your money back if they have taken more out than they should have?
Mm-hmm.
I don't know. You can write. You have to prove that they've taken more out than they should have, and it can take time, several months,
yeah,
to get your money back.
Well,
that's on you.
Oh, it's all on me.
It's on you then.
Well, no, we had a client that was on installment agreements, and is there any kind of penalties and interest when they're not paying them?
Yes, there's always interest and penalties accruing. Even when you're on an installment agreement, it's going to accrue right up until the day it's paid in full. That is unfortunately part of the cost. They say for allowing you to not pay in full. And very seldom do they ever relinquish or forgive those costs. The penalty, maybe the interest is sort of generated by Congress, and therefore you very seldom will ever get the interest reduced.
And now does that go with the offer and compromise as well, even though you're agreeing to pay those 4
That's the
payments?
offer and compromise as well. We're coming up on our break here, so what do you want to say?
Bye. Pay your payments. You don't want any penalties and interest.
This is Anthony Sykes and Tricia Hugues. You're listening to the Sykes County Rant and Consulting Radio Show. We'll be right back.